Next, we move to topic 6, financing activities. The last classification of business activities is financing. Financing activities can be related with the balance sheet and the liability side of the balance sheet of the financial statements. Cash flow from financing activities is a net amount of funding a company generates in a given period of time. Finance activities includes the issuance and repayment of equity, payment of dividends, issuance and repayment of debt, and capital lease obligations. Companies that require capital will raise money by issuing debt or equity, and this will be reflected in the cash flow statement. These are the different transactions that involve the movement of funds between the companies and investors, owners, or creditors to achieve the long-term growth and economic goals and have an effect on the equity and debt liabilities present on the balance sheet. Such activities can be analyzed through the cash flow from finance sections in the cash flow statement of the company. This slide depicts the financing activities. So issue or repurchase of equity plus issue repurchase of debt, that is a borrowing debt fund, plus a dividend payment to the shareholders and other items. These are activities coming into the financing activities. Of course, financing activities have a positive and negative cash flow, that is cash inflow and cash outflow. If companies borrowed money from creditors or banking sectors, there is cash coming inside. There is cash inflow in the financing activities. Suppose the company making payment to their creditors, that is repayment of loan, principal amount. That is cash outflow of financing activities. Company issue bond, the company raising funds through issue bonds and issue of shares, cash is coming inside, cash inflow. If the company buyback of shares, the cash is going out, that is cash outflow. These are some examples which we have seen. Financing activities: issue of equities, repayment of equity, payment of dividend, issue of debt, repayment of debt, capital, finance lease payment. So each and every activity is having their own nature. This slide shows example of cash flow from financing activities. Below is an example from Amazon's 2017 annual report. In the bottom area of the statement, you will see the cash inflow and outflow related to financing. See activities in the financing. So as we saw in the last slide, see proceeds from issuing of long-term debt. This company raising fund through debt. Say for example, company might borrow from bank for long-term purpose, or else the company may issue bond, 10 years bond, it may be 20 years bond or 30 years bond. Through issuance of bond, company raising fund. So cash, in both the cases, cash is coming inside. So it's inflow. And repayment of long-term debt. The company might be repaid their debt, principal amount. Some of the principal amount, or it may be entire the principal amount, the company may repay. So cash is going out when the company making repayment of debt. So cash is going out, this cash outflow obviously. Then principal repayment of capital lease obligations. So cash is going out, repayment. And principal repayment of finance lease obligations. So operating lease and financing lease. Right use of assets, an example we can say. So these are the examples of financing activities. If the company making interest expenses, it will be added in the operating activity, then it will be deducted in the financing activities. In both the sides, the interest expenses may be shown. Thank you.